Good morning and welcome to this weekly markets update from AGM Markets. There's the 28th of May 2014. What we'll do today is go through some technical analysis on Euro dollar, cable, dollar Swiss, Aussie and gold. Just going to review what's been going on in the markets over the last sort of week and give some sort of outlook for this week. I will not make any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer, which is on our website, and that is www.agmmarkets.com. That'll be appreciated. For any new followers out there, we have 3 moving averages on each of these charts. The red one is a 50 simple moving average, the purple is a 100 simple moving average, and the gold is a 200 simple moving average. Okay, let's have a look at the Forex calendar. So we're doing this video on a Wednesday. We normally do it on a Monday, but of course we had a UK bank holiday. So on Monday we had ECB President Draghi speaking. Yesterday the only sort of high impact data was the core durable goods from the US that came in just a little bit below expected there, but nothing major. We had Draghi speaking at 2:30, didn't impact the markets too much. And then we had US consumer confidence that sort of came in a tad just below expected as well, but pretty much in line. And we had Governor Carney speaking as well, but nothing major sort of moved the market this year. Well, yes, I mean there were some big moves, but in terms of euro and cable, nothing too big. Today, we've had some overnight stuff. So we had Bank of Japan Governor Kuroda speaking. And any of you trade the Kiwi with the ANZ business conference, that came out 53.3. But for the rest of the day today, it's just sort of mid-tier data, nothing major at all. We've already had a few bits out, but nothing major. Tomorrow, overnight, we've got the from Australia, we've got private capital expenditure quarter-on-quarter figures. But the main highlight for the week is at 1:30, we have the US preliminary GDP quarter-on-quarter figures, and we have the weekly jobless claims and the US pending home sales. So a lot of US stuff. Well, 3 key pieces of US data there coming out tomorrow. And then on Friday, just lots of sort of mid-tier and lower tier data. The only high impact stuff is from Canada. We have the Canadian GDP month-on-month figures coming out at 1:30. So pretty light on the data front this week. That doesn't mean the moves are going to be small. I mean, we've already had some big moves in certain asset classes, which we'll talk about. In a second. Okay, let's have a look at the chart. So what do we have on euro here? It's starting to slide down further and further, and we've been saying in the last sort of few weeks since we had this sort of double top move up here. Remember we were speaking about this sort of fib. This candle here, the key one here, key reversal candle forming a double top. That is why we've been sliding for the last sort of couple of weeks, and it looks like it's just going to do the same this week, to be honest. I'll not be surprised to see this 50-week moving average get tested maybe this week, or next week, or even the week after, but it definitely looks like it wants to come down towards that level. The fib, which I think could be of focus, is this sort of move here. So from the lows of 2013 towards the high of 2014, I think that's definitely a sort of a key swing low there and swing high move. And also the 50% does sort of coincide with previous resistance as well. Here at the 1.3570s. Well, of course we're still a long way away from that, but it's good to keep it in mind. I'll keep it in mind in the next sort of few weeks, really see how we are on this weekly chart. And that's pretty much it in terms of the weekly, to be honest. I mean, if we do get any sort of bounce up, then the fib I'll be looking out for personally, this move here, small move here. So from the swing high of 2014 to this recent swing low, but of course that could just keep on going lower and lower on this chart. But if we do get a bounce, that's definitely the high that I'd look at, and it's the same on the daily chart here. So that move there. So for example, if we've stalled here, if we grind higher, that 50% comes at 1.3802s. And what else on this daily chart really? It's all about just playing the sort of the round numbers really. I mean, you can see we're sort of hovering at the 136 level currently. But I definitely sort of favour selling any bounce here. I think that's definitely the way to play it, because it does look very heavy on that weekly and there's a lot of room to go down. But I mean, in terms of the sort of dips, buying dips are sort of pretty much done and dusted now, I'd say. You can see that trend line's broken there. We've had this double top, which we've closed below the 200-day moving average here. And you can see, I mean, it's just a lot of room on that weekly chart. So yeah, I'd say it's all about just selling any bounce towards the upside here. Yeah, that's probably, I mean, and on the daily chart, I wouldn't personally. I mean, you could look at this sort of this swing low, this fib move here, and we may get some sort of brief pop if we do get down to this. So that comes at 135.50. I'll personally keep an eye on it anyway, because it's a nice round number, 50 pip increments. So yeah, that's one to keep an eye out for as well, to be fair. And that's pretty much it on Euro, to be honest. It does look very heavy. And it's all about just selling any rallies, I think. Keep an eye on these moving averages as well. So we could get a brief pop up here to the 200-day moving average. It could reverse and then come back down, and likewise with 150 as well. So yeah, also there's a bit of confluence there as well. Well, let's say it goes down a bit, then the 50% could line up smack bang on the 50 or the 100 there. So keep an eye out on that as well. Cable on the weekly, similar to Euro, it's starting to look heavy. I mean, we've been speaking about it for a while on cable. It's such a strong uptrend. It's been rallying for a while. The odds do favour the downside, in my opinion. It's just been due a retracement, and we got that retracement. Remember at the sort of the 169s there, we got a close below, and it sort of spiked off the 170 handle pretty much to the pip there. So key levels, remember these 2009 highs, spike highs, it's sort of stalled at that. So in terms of this weekly chart, of course we're still a long way away from it, but that's definitely the fib to keep an eye out for over the next sort of few weeks, few months, etc. If it does really start to sell off here, and it really could quickly sell off here on cable, because there's a lot of room to come down. It's a long way away from its moving averages, so I would not be surprised to see that happen on this weekly chart. In terms of shorter term stuff, similar to Euro, I think it's all about just selling the rallies. So if we flip it to this daily, I'm just going to zoom in a bit. One sort of example here, you can see classic move here. So this is the May high to May low downtrend, a brief rally, stalled at the 61.8, daily closes below, and we're selling off now. So odds are that we're going to come down to that 0% line. If we do get to that 0% line, we break lower. Then the next move it's just all about just selling these dips, I think. So that'll be the high that I'd personally use, and then let's say the lows around here. Then that's how to draw it, I think. But the other move to keep an eye out for is this one here. Remember, this is still technically in play. This is the fib move from the low of March to the high of May. Uptrend retracement. Remember, we got that nice reversal with a 50% retracement there. A brief pop up, but you can see we got capped at that small 61.8 there. So it looks like it's going to come back down. And of course, keep an eye on that if we do get some interesting action at 50%, because of course there's nothing stopping it retracing back and taking out highs. But I mean, I don't think that will happen, but of course anything can happen. So and if you're sort of an intraday trader looking to scalp sort of 20, 30, 40 pips, and then we could get some sort of 30, 40 pip action off of that 50%, and then it sell off again. So that's pretty much it in terms of cable. I mean, on 4 hours the same thing, so just drawing the fib from there. I mean, it's not as technical there, you can see on the 4 hour, but you can see it pretty much came off the 169s there. So but in terms of the daily, it looks more technical in terms of that fib. But on the 4 hour, you can see it was more than 169 there. Well, we did get a couple of closes above actually there. So but yeah, that's pretty much it in terms of cable. Dollar Swiss, it's just grinding higher and higher. We've been speaking about last sort of couple of weeks. It looks like it was similar to Euro. Remember, Euro on the weekly is looking like it wants to grind down towards its 50-week moving average. On Dollar Swiss, it looks like it wants to grind higher towards the 50-week moving average. And of course, we've got these sort of fib moves here. So on dollar Swiss, you can see 61.8 of the high of 2014 to low of 2014. This is the next sort of key resistance on this chart. It sort of got front run by a couple of pips yesterday. But yeah, keep an eye on the weekly close as well, because it could reverse off of that, but I personally think it looks like it wants to come and grind towards this 50-week moving average. If we do get any sort of retracement in the fib to keep an eye out for, is this move here, I think, solid uptrend. You can see that clear obviously on the daily and the 4 hour as well. So you can see daily there, that's the move. So from low of May to the high of May, if we do get any retracement, 50% comes in currently at 0.8842, with the moving averages as well hovering around that level. And you can see it's the same on the 4 hour chart as well. I mean, the smaller dips I'm not a massive fan of on this chart because they're not that obvious, but I mean, I think this was one here. Yeah, that move, no, it wasn't really, because it didn't come and test the 50%. But yeah, it's more about looking at the obvious move, I think. On the dollar Swiss, I don't think the shorter term stuff has been that sort of clear. You can see there, if you're looking at the 1 hour, it's not majorly clear. But if you're looking to sort of, if you're an aggressive buyer of any sort of dips and just personally keep an eye on the round numbers, I'd suggest personally. Aussie on the weekly, it's still chopping around sideways, but I mean last week was more of a bearish candle, but it's still above this 50-week moving average. Yeah, I mean, if we do get any sort of quicker retracement, that's still the fib to look out for. This is the fib from the low of 2014 to the high. The 50% comes at 0.9060, and it coincides with previous resistance here as well. And then, so I mean, the key resistance still on here is this 0.94. You can see that's where we sold off there. It's tested it multiple times. A couple of weeks ago, I remember we had that test, and then last week we sold off. So yeah, nothing major of interest to be honest on this weekly chart. On the daily, I still think it's got some room to come down. So we spoke about that move there, remember, off the sort of 61.8s. So the next move is this one here. If we do get any sort of pop up, keep an eye on that 50%. I mean, ideally you'd like it to have formed a new low, but and just to keep an eye on it, really, it does coincide with the round number, which is 0.93 as well. You can see that a bit clearer as well in the 4 hours. That's a standard sort of fib move there. Nice solid downtrend. It's sort of just slowly retracing towards the upside. Yes, you can see we're currently stalling at this 50 bar moving average on the 4 hour chart, but it could easily keep on grinding higher towards that 50%. And that's the only major interest, to be honest with you. You can see it's just been quite choppy on this sort of 1 hour chart here. Yeah, that's pretty much it, to be honest, on that Aussie. I'd have thought we'd be looking at similar sort of things in next week's video as well. But of course, yeah, I mean, if you're looking at 4 hour on this sort of daily chart, sorry, it's a nice downtrend. It does look like it's sort of flagging, so I would not be surprised to see it come and touch that 50% of the 93, reverse and come back down to more healthier levels. And when I say healthy, I think towards this sort of 50% here. I still think it will come down here. I think odds are definitely, because that'll be a nice sort of pure fib move, especially if you look at it on that weekly as well. Gold's starting to get interesting. We've been speaking about for a long time now, definitely the last sort of few weeks. I'd say about the last sort of 7-8 weeks. This fib move here. So this is the fib from the, well, pretty much the low of 2014. It is technically low of 2013. It was right at the end of 2013. I did post a tweet out earlier actually about it sitting on this 61.8. But what we've been speaking about the last sort of few weeks is how it was sort of supported at the 50%, but it struggled to get above this 50-week moving average. And you can now see it's sold off this week already, and you can now see it was sitting just above this 61.8% retracement at the 12.62s here. So key week on gold. If we're going to take a stab at these 0% highs, it really does need to reverse this week. I'd have thought this is the last sort of key chance, I'd say. Well, in terms of this fib, definitely. So yeah, keep an eye on the weekly close. If you look at the sort of daily chart, you can see today's daily candles starting to make a bit of a reverse. But you see yesterday's daily candles are a very heavy one indeed. It really just triggered all those stops. If you flip it to the 4 hour, it's looking quite nice for a reversal. Definitely sort of, I would not be surprised to see it at least sort of come up to these. If you draw that smaller fib there up to 1277s, we should, I would not be surprised to see a pop up here. Sellers sort of banking profits at the 61.8 here, and we'll get some sort of relief rally. But no, definitely going to keep an eye on gold this week, because we've been looking at it for such a long while now. I mean, remember we had the 1280 support. That was a lovely support there, but now it's just broken above that. But of course it could close above, so I mean, odds are that it probably won't, but you never know on gold. We can't, especially the GDP number. If we get a really weak GDP number, things can dramatically change on here, and it could just form like a really bullish hammer here. So keep an eye out on that. It's really interesting on the short-term charts as well. The 4 hour, you can see there, 1 hour as well. It's been nice and technical. So yeah, that's it for this week's video. Hope you found that useful. If there's any other pairs that you want me to have a look at, then feel free to send a tweet to our Twitter feed, which is at AGM Markets, or comment under the YouTube video. Hope you have a great rest of the week trading, and I'll catch you next week. Thanks for watching.